Hello, I'm Chris Polychrone, your 2014 NAR President-elect. New mortgage finance rules concerning mortgage credit are scheduled to take effect early this year. Consumer Financial Protection Bureau Director Richard Cordray recently joined NAR and a group of housing policy experts to explain the rules' impact on consumers, lenders, and the housing market. He discussed the ability to repay rule and how it would change both real estate transactions for buyers and lenders. The rule was written to clarify language that protects borrowers from risky loans, which were all too common before the recession. It says that lenders must make a reasonable, good faith determination that a mortgage is affordable to the consumer. While that may sound basic, the specifics are actually very complex.
So there are three main categories of qualified mortgages. The first is any mortgage that has a debt-to-income ratio of 43% or less, which is quite a high number by historical standards. I think for years we talked about spending no more than about a third of your income on housing. Second, though, in addition to that, recognizing that there was uncertainty about GSE reform and that Fannie Mae and Freddie Mac were significant underpinnings of the current real estate market, we also said that any mortgage that is eligible for purchase by the GSEs, Fannie and Freddie, while they're in conservatorship, whether or not the DTI is 43 or below, is also eligible to be a qualified mortgage and can qualify it as a prime mortgage as a safe harbor. Third, in addition to that, and this was after we finalized the rule originally in January of 2013, we recognize that for many smaller creditors, in some parts of the market, particularly in rural areas and small towns, they are the key part of the market, and that they did not cause the financial crisis, and that they lend responsibly. And so for mortgages that they offer, that they keep in portfolio, that may be customized to particular personal circumstances of borrowers and customers that they know well, and they know the community well. For those servicers with $2 billion or less in assets that offer 500 or fewer mortgages per year and loans they keep in portfolio, those would be deemed to be qualified mortgages as well.
We had a very productive session and pledged to keep working with participants to monitor the results and continue our discussion.
I said it to the realtors and I say it again to you today. As we go, tell us what you're seeing and finding in the market. Tell us what your actual experiences are.
I promise you that realtors will be your boots on the ground, and we will be your sounding board. This event showed the power of realtors to influence public policy for the good of our members and consumers. We're confident that our efforts will ensure a balanced approach that will make mortgage lending safer and more accessible to consumers. Thank you.